Hi, welcome back to the YouTube channel of Regular Banking. Today's discussion is on a very informative topic, that is moratorium. But before moving ahead, in case you haven't subscribed to our channel, do subscribe in and press the bell icon to get the updates for all our upcoming videos. In today's video, we'll discuss what moratorium is all about, why does bank offers moratorium, we'll learn why there is no moratorium facility for certain kind of loans. We'll also try to understand the pros and cons of a loan moratorium, and we will learn how does moratorium actually works. To begin with, let us understand what is moratorium. A loan moratorium is a period of time during which the borrower enjoys repayment holidays. In other words, even after loan disbursement, the repayment of loan does not begin during the moratorium. So normally your repayment begins immediately after the loan is disbursed. However, under the moratorium, repayment rather starts after some time and the period is termed as moratorium. Now, there is a very basic question, why does bank offers moratorium? So, bank offers moratorium for a better repayment plan and fund management in the cases where the proposed activity does not start immediately. Proposed activity is nothing but the activity for which the loan has been provided. Since the source of repayment is the proposed activity, a moratorium on a loan is offered till the commencement of the proposed activity. Let us understand this with the help of two examples. In the case of education loan, moratorium is offered till the completion of the course or 1 year after completion of the course. During this time, the student is expected to become financially independent. Education loans are repaid by students after they start earning. In the case of project finance, the moratorium is offered till the time project is implemented. That is, the production actually begins. The repayment starts only after the unit has commenced production. So another reason why bank offers moratorium is that there is no fundamental loss from the bank's point of view, because in maximum cases the interest during moratorium is paid as and when due. The borrower is required to pay the interest during the moratorium, either during the moratorium or after the end of the moratorium. In both the cases there is no revenue loss for the bank. Therefore bank offers moratorium. Now, does that mean moratorium is offered in all kind of loans? No, a moratorium is not offered in all kind of loans. Generally, loans such as personal loans, gold loans, loans against property, etc., are offered for personal use, and their assessment is done on the basis of the net worth of the borrower and his repayment capacity alone. Thus, no moratorium is offered in such kind of loans. So, what are the benefits of a loan moratorium? There is a better repayment plan. A loan moratorium can help a borrower to plan his or her repayment strategy in a stress free way. It helps the borrower accumulate funds from different sources and begin the repayment in an orderly manner instead of rushing to pay without proper finances. Also, there is no negative impact on the credit score. One of the most important benefits of a loan moratorium is that it doesn't impact your credit score negatively. Non repayment of installment does not lower your credit score. But in maximum case, remember that you are required to pay interest amount during loan moratorium, and non payment of interest will definitely affect your credit score. Also, loan moratorium helps during a liquidity crisis. The temporary break in a repayment of loan can help individuals in distress take stock of their financial situation and plan for a better future. For example, a loan moratorium during construction can be really helpful to mitigate a liquidity crisis that can arise out of various reasons, for example, increase in the general prices of the raw materials, malfunctioning of the machinery being used in construction, labor issues, etc. It basically helps the borrower to better prepare for repayment after the moratorium. Now, the loan moratorium has certain drawbacks as well. The very first drawback is that there is no interest waiver. So, one of the biggest drawbacks of a loan moratorium is that loan prepayment is not waived, instead, it is only deferred. This means that as a borrower, you still owe interest to your bank or your lender, that you're required to pay the entire interest amount because it has not been waived, it has only been deferred. The second drawback is the sudden burden. While a temporary break from loan repayment offers short term respite, the fact of the matter is that the backlog of interest eventually catches up with you. For example, if you choose not to pay the interest amount during the moratorium, then either you will be required to repay the entire interest amount at once or the interest amount will be capitalized, whereby you'll have to pay interest on interest. The third drawback includes increase in loan tenure. The longer periods of EMI breaks automatically leads to longer loan tenures. For example, if you avail a moratorium of say 1 year on a loan that was to be repaid in 3 years, the repayment period will now be stretched to 4 years. So the original repayment tenure gets increased in case of moratorium. Now let us understand how moratorium actually works with the help of an example. Say a company ABC Private Limited has approached Bank A for sanction of a term loan of rupees 5 crores for the construction of a manufacturing unit. Now let us understand the process flow. Say the company in January 2022 approaches the bank for finance. Now after all the formalities, bank approves the loan in March 2022. As per the project outlay of the company, the proposed activity is to start from March 2023, which includes 9 months of construction period and 3 months for installation of machinery and thus begin with production. So as you can see here, the bank is offered additional 6 months for better repayment plan or fund management. So the first installment will be due in October 2023. The company will have to pay interest during moratorium. Do remember that the company is required to pay interest during this moratorium period of 18 months. Now let us try to understand how moratorium actually helps the borrowers. A moratorium helps to tackle contingencies. So there are various factors that are involved during project implementation like cost overrun, contingencies etc. which might need more capital infusion. So say for example the cost of bricks or other basic raw materials rises, it leads to project overrun. For example, production is delayed due to various reasons like defect in machinery etc. So a moratorium helps to tackle these contingencies in a better way. The second way a moratorium can help is that you always have the option to deposit your surplus fund in your loan account. Opting for moratorium helps you to save the surplus fund and utilize it later in case of any unforeseen contingency. A moratorium also helps in smooth repayment. During initial years, the production might fluctuate due to various reasons, which in return might affect the earning. But if you haven't opted for a moratorium, even in the case of a shortage of funds, you will have to repay the loan installment with interest. So, in the case of non repayment of loan installment, your account will be classified as NPA or non performing asset if the overdue is for more than 90 days. So, a moratorium helps you to repay your loan smoothly. Another concept related to moratorium is drawdown schedule. This basically refers to the fact that the total amount of loan sanction doesn't get dispersed at once. There is a drawdown schedule for the same, thereby meaning the loan amount gets released or dispersed in stages and it is done as per the need and convenience of the borrower. Remember that the loan is getting disbursed in stages. Therefore, the interest amount gets applied only on the amount that is outstanding and not on the total sanctioned limit. So, to conclude, a moratorium can be a real advantage for those who are seeking temporary relief from financial hardships and have serious issues with their cash flow. However, a moratorium must be entered into with an intention of discipline when it comes to repayments after the end of the moratorium period. Hope you have liked the content. In case you have any queries related to the topic, you can post the same in the comment section below or directly message us on our Instagram handle. Thank you for watching the video. Stay connected.